Hello everybody, a very good morning to you and welcome to a brand new week in the markets this week. This is not a normal Monday, and I'll get into that in just a second with everything that's gone on over the weekend. Sometimes this does happen, obviously, when markets are closed over the weekend. We wake up on Monday and the story's completely changed and the narratives are completely changed, and it pretty much throws out all the analysis and work that you put in the week before. But that's why today's a very important stream to try and get up to scratch with everything that's just happened and the reason we're seeing the moves that we're seeing at the moment. So hello to everybody. If you are around and have any questions on the markets this week, then feel free to put them in the chat section. Hello to Dibble, good to see you, and hope you're doing well and you're ready for what's going to be a very interesting week now with what's happened. As usual, I'm going to break down the top events and opportunities of the week. So we're going to be going through the economic calendar just to have a look at what are our high impact news events. But obviously, as I've just said, there's more than just that now thrown into the mix. And that's why turning up to these daily live streams is very important if you want the lowdown of exactly what's going on. We also last week closed out, I actually closed out, all of the open trades that I had, and updated my trading journal, and we're now at the beginning of a new month, which means a new tab for me. So I think I ended January 9% in profit, which is, as a year goes, is probably one of the best trading months that I've probably had or will have in a typical month, in a typical year. So not expecting anything. It's a new month, absolutely new opportunities, and then we'll break down any of those to start off with February in this stream as well. Okay, right. So if you've maybe just waking up over on the Europe side, you probably will have seen this, which is basically stocks down heavy, Nasdaq leading the way, minus 2.2%, dollar up heavy, up 1%, which for a Monday morning is pretty unheard of. This isn't the middle of the week where we've had all the high impact news events. This is, Monday morning markets just opening, huge gaps in the market. And also we see oil up quite a lot as well. So I think we see oil, where is it? It's up 0.3%. I think it was up a bit more than that earlier. But those are the main talking points, really. And as you can see, and we'll go into each individual one as well, because I'll need to update my analysis now, because it's a lot of it's been blown out of the water with the Trump situation over the weekend. But as you can see, big gaps lower from Friday's close through to Monday's open. And for those who trade fair value gaps like myself, it's a pretty exciting time to try and get into some trades, because we have got gaps really across the board, particularly in dollar pairs and obviously in the stock market. I think the global stock market is struggling. If I go here, you can see that Hang Seng down 0.3. The European stocks are down quite heavy as well. The FTSE's down 1%. China 50's down 1% as well. So it's not been a positive start for the week for the stock market bulls. Essentially, what happened is we know that Trump's been threatening tariffs ever since he was going to be in the driving seat in the US. But a lot of people doubted his. A lot of people saying that he was just talking. He wasn't actually going to action any of these tariffs, or in a really aggressive way that maybe he was hinting at. And that was a note to us that if Trump says something, then he's probably going to do it, because he's just announced pretty heavy, pretty aggressive tariffs on Canada, Mexico, China, mainly those, and has vowed to, set tariffs on Europe, which are coming soon apparently. And the only one he's really said that he's going to spare in any way is the UK, which is an out-of-line economy apparently, according to him. So in really simple terms, because this is obviously, you can go into as much details as possible. If you don't understand what tariffs are, they're a tax on imported goods. So imagine any geopolitical tensions in the world. Instead of stoking war and violence, what sometimes people do is they try and stoke it in a way that will hurt the economy or hurt both economies, and that's by lowering production. So with tariffs increasing in the US, essentially what that does is it puts the dollar in the driving seat, because it makes dollar imports more expensive, and also it threatens the idea of lower production, production in the global economy, really, and that's not positive for the stock market. So if you're wondering why the stock market is because it's basically killing trade. Globalization is killing trade across economies. Tariffs are never a good thing, really. So I've got this article here, which I'll drop into the Discord channel if you are there. I'll put that in the general chat, because it's one of the best ones that I've seen, and it's really important that we take a look at what essentially is going on. So Canada and Mexico, remember, they're two of the top 2 US trading partners as well. So this is the worry, is that they've immediately vowed retaliatory measures. So basically, and China have also come out and said that they're going to challenge Trump's decision with the WTO, which basically means legal battles, and it's just everything is just negative for the global economy. So I don't mean to come on and necessarily be the bearer of bad news, but this isn't positive for the stock market at all going forward, because it's just going to lead for tit for tat. We'll put tariffs on you and you put tariffs on us, and all it does is it lowers the trade levels between the two, and things that I need from you and things that you need from me, you're going to cost a lot more for it, and it's going to hurt the domestic economies. Essentially, that's what happens eventually. So the surprise for the markets is basically that Canada and Mexico retaliated immediately. So they almost knew it was coming. And then we've got China and the EU, which I imagine China would retaliate. And this is just going to lead all to a sharp contraction in what is called global trade, so trading between economies. So, as Trump promised last month, the United States have hit Canada and Mexico with duties of 25%, which is it's not a small tariff increase. It's probably the most aggressive that he could have possibly gone. China with 10%, calling the measures necessary to combat illegal immigration and the drug trade. Trump's early strike just 2 weeks into his 4-week term is likely to hit investor confidence, which it has, and it really breaks down the points here as well. The consensus had expected US tariffs would only threaten the economic outlook in the second half of 2025 after lengthy negotiations first between the US and its major trading partners, but Trump's just come out and basically just hit them with it straight away. So that is the shock that we see. This point here, this is the one that I really want everyone to focus on. What the problem here is that we know that inflation's been a thing in the global economy, right? So inflation, although it's been coming down globally, we still will have inflation at high or elevated levels. And when you throw into the mix the threat of global trade, what you could have here is a situation of stagflation, which is where you have weaker economic growth prospects, but you have higher inflation levels. And that is the worst situation that any economy can have. Prices going higher, but economic growth falling. So that's the reason we see this. Okay? It's not really necessarily a US factor in particular. It's a global factor. That's why we're seeing all of these markets down. So let's start with the stock market first. And we will break down, we'll just have a note to the economic calendar as well, because there's really important news coming out this week, which I'm not sure of the impact of it, but it's just going to add to the volatility. So this was the previous analysis that we had on the NASDAQ, and you can see we had a breakout above this trend line, but I'm actually going to delete that now. And I know, Kurtzen, if you're watching on catch up, which you probably are, I know you was looking for a breakout above this fair value gap, and to be fair, if it wasn't for that over the weekend, it probably would have been good to see that move higher. We've had stronger earnings out in the US as well, but it hasn't really improved sentiment at all, and now we're looking at a market which is really threatening this low. So I'm not usually one who looks for selling opportunities, but liquidity down at this low. If we get a situation where the market breaks down below this area, this low basically, which is a liquidity area as well, we could also see a liquidity grab. If we see a break below it, look for a retest into the fair value gap, and then potentially something that looks like that. So what I want people to do is, in order to plan their week's trading, this is the way that I would do it, is I would mark all of the gaps that we see. And I'd go a step further and try and mark if I actually draw that again, because it wasn't quite right here. And Connor, here we go. This is basically, this little dotted line here is the 50%. And when you have gaps this big I always try and use the 50%. So actually what I think a good trade could potentially be to start the week is if we do get a situation where the market moves up in towards the 50% of that fair value gap, that could act as resistance to drag things lower. Same with the US 30. Just go through and draw all of these fair value gaps. So the fair value gap is the Friday close. Oh, so I'm still on one screen at the moment. It's really annoying. That will be changing. The Friday's close, Monday open. Draw that gap as accurately as you can. Try and utilize that 50%. And look for something like that. There we go. Up to here. And then all the way lower. So that's pretty much the way that I would look initially to play the stock market, because I imagine when people are waking up today, they're going to try and get a piece of this, and it's very, very difficult sometimes when that gap's already formed. We have to be patient and wait for that retracement back into the gap, and then we can look to try and carry on the momentum. I find it very difficult to sell the stock market. I've been burnt a few times doing it. It does always, history would tell you, it always ends up on top. So you got to remember then, when you are looking for shorts in these markets, then you're going counter trend on the higher time frames. So just lower that risk, half that risk. You can get some really nice aggressive shorts. Often when the stock market does fall, it falls quickly, so you can get some good moves. But I would always recommend, if you're going to go counter trend on anything, particularly the stock market, I would always look to lower that risk. Okay. The other story, of course, is the dollar story. Now, in really simple terms, we don't need to go into too much detail, but an increase in tariffs essentially means positive domestic currency. So the US are the ones implementing the tariffs on imports. That is a positive and bullish sign for the US dollar going forward. Now, as you can see, what I was looking for, let's delete this now. This is the dollar index, so not necessarily something that we can trade as such, but just to give us an idea. We had an initial move lower, and I was looking for a breakdown below the FEG and a move higher, but as you can see, we filled that fair value gap, and then boom, we're going higher. So if I'm being honest, the dollar's a very, very difficult sell. I would actually try and be a bit cute here and look for some retracement in the dollar first, a little bit of a pullback, maybe down in towards what we've created. If I go on like the euro dollar, for example, you can see again exactly the same thing. This trade actually worked out really well. I'm a bit frustrated I didn't get in. You can see this breakdown below this channel, retest, and then you can see we move lower, which is a bit annoying, but same thing. Fair value gap, 50%, boom. I mean, you can do this on pretty much any of them. So these are sort of short, quick trades, which probably you won't be in for too long. But I believe that going forward now, and obviously we'll have a look at the economic calendar because there will be data coming out. I think going forward, I think it's put firmly in my mind more that I'm looking for some dollar longs going forward. Just a little bit frustrated that we were already down 1% already on the Monday morning. So yeah. Okay, right. So, economic calendar for this week. High impact news event only. Tuesday, Wednesday, we've got unemployment coming out of New Zealand. So if you're trading the New Zealand dollar, particularly against the US dollar, have a look for that. Wednesday, we've got ISM services, PMI. And basically this is to summarize it quickly, this is a week where we have NFP on Friday as well, which is just the timing of it is incredible, really. So really the main impact, or the highest impact news event we're going to have is the Friday's NFP. But before that, we've also got the Bank of England, who will be increasing or decreasing or holding their interest rates on their Thursday decision. So if you're a trader of Cable, pound, US dollar, that's going to have plenty of volatility this week. So you've got all the stuff with the tariffs, you've got high impact dollar events, you've got NFP, of course, and you've got the Bank of England interest rate decision. So I'm actually going to be trying to look for a decent trading opportunity on the pound this week. Obviously, the big one is NFP on Friday. So non-farm payrolls forecast is for 170k, previously at 256. We will break down NFP in a lot of detail on Friday morning in the lead up to it. So having a look at our bullish and bearish scenarios, or our hawkish and dovish scenarios, and what that could mean for the US dollar. So make sure you tune into that stream on Friday. What I think my best advice would be to let the market settle whilst we've had these big gaps over the weekend. See what the fallout is, see what the retaliation is. More retaliation from all the economies that are getting these tariffs imposed on them. The more retaliation we get, the weaker the outlook for the global economy, and the weaker the stock market becomes, stronger the dollar becomes. So if that narrative continues, look for those fair value gaps for some good opportunities today. Okay, right. I will end the stream there, and what I'm going to do is continue with the setup that we have going on here in this office. So we're going to be set up really soon. So all the lighting, etc., will be done, and we'll have much better content coming out going forward. Thank you for those who tuned in. If you do have any questions on what's happening in the markets this week, reach out to me on Discord. I'm only on one screen at the moment, so I can't really see much. But reach out to me on Discord, and I will be able to answer that. The link is in the description, and it's completely free. And you're going to get all of my trade ideas, the community's trade ideas, trading signals going in there as well. So make sure you join that as quickly as you can. And yeah, have a good week, everybody. And I'll be live again tomorrow, same time. The streaming schedule is in the Discord channel as well, so you'll see exactly what I'm going to be covering. Okay, take care. I'll see you soon.